Hi, everybody. So we're gonna continue on in chapter 10. So big picture perspective in chapter 9, we talked about how to record payments that a company's making to vendors or whatever to pay expenses and acquire merchandise and stuff. Here we're in chapter 10, we're recording the other end. So the money coming into the business by customers paying for things, right? So it's like the other side. So let's, it's like the sales side as opposed to the purchasing side. Is okay? So in chapter 9 we had the purchasing journal and the cash payments journal and the general journal. Here in chapter 10 we'll have a sales journal. Yes, Gavin?
Are we working on 10.3 today too?
We're gonna do 10.2 and 10.3 is the plan.
Alright.
Yep. So I'm just trying to give connect chapters 9 and 10, because it's really one half each of the same process, right?
So chapter 11 like 10 and 9.
I haven't looked that far ahead. I'm currently one day ahead of you guys. As I started the year off, I had a big head start, and it slowly whittled away. Yeah. But that's the idea with the relationship between chapters 9 and 10. So the two sides of the same coin. So in 10.1, that was your assignment on the virtual day. It was fairly easy. It was just talking about how to track sales tax, right? When somebody buys something from you and there's sales tax involved, a certain amount of that money gets recorded into your coffers, and a certain amount of that money, the sales tax, has to be set aside for you to pay to the federal government. So in section 10.1, you talked about how to track that monies, and that should have been fairly easy, right? Those of you that did 10.1, seemed like that went pretty smoothly, right? So 10.2, we're gonna look at today. Oh, come on now. Okay. So what we're gonna be looking at is posting from our sales journal into our accounts receivable ledgers. So again, the sales journal is people are buying things from us, we're recording those purchases or those sales in our sales journal, and then we have to record either, if that's the people are buying things from us on credit, on account, we have to record that debt. Or if they're buying in cash, we have to record where they're putting that cash. Or if they're paying some combination, or if they're paying down their account. So they bought something on account from us earlier, and now they're sending cash in later. Those are the types of transactions we're gonna see here. And then how to record them into the ledgers for these individual companies that we have accounts with. So an example here, in our sales journal, Wells Apartments has a transaction there we've recorded, and then we're going to take that transaction and we're going to transfer it into the individual ledger for Wells Apartments. So again, we take the date, and we we post-reference the sales journal number. So with the sales journal, that'll be S for sales 11. Okay? So it'll be S11, the S is for sales because we're operating out of the sales journal. And then we'll take the debit goes in, and then we total our new debit for Wells Apartments. And then the last step is we record the post reference where the account number for Wells Apartments gets attached to the transaction in our sales journal. So the same kind of journalizing pattern that we've seen over and over and over again. You guys are still not consistently writing the post references, especially in the journal. You know, I think you do a decent job of getting them in the individual ledgers. The journal, we still forget. Everybody feel okay with this? So at the end, once we've finished our recording the transactions in our sales journal, we'd want to prove and rule that sales journal. So again, we write the single rule to say we're going to add stuff down. We record the end date for the month. I think at least in the application, that's the problem that I did to make sure I understood what was going on. I think they use November. There's 30 days in November, so you got to be careful about which ones are the 30 and 31, and hopefully everybody remembers that February has the 28. I can never remember what months have 30 or 31. I got it wrong when I entered. I thought 31 days in November. Nope, there's 30.
Yeah.
You write the total, and then you add down the columns. So a lot of inconvenient numbers, you'll need a calculator to sum down the columns. And then once you've done that, you can double rule. The check here should be that the sales credit total plus the sales tax payable credit total should give you the accounts receivable debit. So the $90,000 or the $9,021.23 should equal $8,637.50 plus $3,800 or $383.73. If I add those three things together, I should get the same total. Or if I add the two on the right, I should get the one on the left. Is everybody okay there? So once I've done that totaling, I'm going to record those totals. So the accounts receivable debit, it gets recorded in the accounts receivable ledger. The sales credit gets recorded in the sales ledger. The sales tax payable credit gets recorded in the sales tax payable ledger. Just the totals for those. So we go ahead and record the date. We record the journal page number that these totals are on. We transfer the totals in. We update the new credit or debit total. And then we record the ledger number onto the journal page. We use a parenthesis below. Again, same kind of standard end of our total proven rule process, right? Okay. So your sales journal, the transactions are going to go into either accounts receivable debits, sales credits, and or sales tax payable credits. Those are the three columns that'll be actively recording things with your transactions. Again, the process to transfer something from journal to ledger, we've done like, I don't know how many times now, but it's been part of like 4 different chapters. God help me, we can do this, right? You take the date, and then post reference for the journal page number, enter in the individual debit or credit amount for the transaction, update the new credit or debit balance in the ledger, and then record the account or the ledger account number into the post reference in the journal. Right, that's your process. Okay. I always forget, do we want to do both sets of notes back to back, or do you want to stop and do the work together? Back to back?
Yeah. Back to back.
Okay. I can never remember what we like to do. All right, so in 10.2, you're gonna be given your own, or given the sales journal for you with the transactions already recorded in it. In 10.3, we're gonna be recording the individual transactions and transferring those into the sales journal. So it's essentially the same process, but in 10.2, the sales journal is already presented to you. In 10.3, we're gonna be given transactions to record into the sales journal and then take that into the individual ledgers. Okay? So it's just like 10.2 is like a partial process, and then 10.3 is kind of like from scratch. All right, so some vocabulary. We say a sale in which the customer pays for the total amount of the sale at the time of the transaction is called a cash sale, right? Credit card and debit card sales are treated as cash sales because the business receives its cash a very short time later. Okay, so yes.
Can I use your charger?
What charger?
Your computer charger.
Where is yours?
Oh, it's like down. Like it got cut out. Someone cut it up and flushed it down the toilet.
You could probably find the cheap one on Amazon.
I would think that the no, I didn't.
Jackson didn't do it?
No, I didn't. I was surprised. I don't know, I heard it got cut up and flushed down the toilet in the office, but that's why the toilet's broken.
Interesting.
Yeah. Well, you guys like real fun. Probably.
All right. Specialized computer used to collect, store, and report all the information about a sales transaction is called a point of sale terminal. What does that sound like? Basically like a cash register is what it sounds like to me, right? Like a modern cash register where you type in what you sold and then totals it up and then you pay with cash or credit or whatever. The report that summarizes the cash and credit card sales of a point of sale terminal is called a terminal summary. That'll be a type of source document that you'll get in this chapter to do transactions with. Okay? It basically looks like a summary receipt. So an example of a terminal summary might look like this. So again, it's gives you the terminal summary number is 35. It gives a date and some time which you ran this report. It says the Visa cards, we did this many sales and this much sales tax, and that's the total from Visa cards, yada, yada, yada. And it gives you like the overall total in all debit and credit transactions. That's probably the one that you would be interested in. Is everybody okay with that idea? So that's like what the source document would look like that. Some more vocabulary. So sales information for credit cards is stored in the point of sales terminals. A report of credit card sales produced by a point of sale terminal is called a batch report. A batch report can be detailed, showing every credit card sale, or the batch report can be summary, showing only the number and total of sales by credit card type. Like that last one we looked at was like a summary batch report. The process of preparing a batch report from a point of sales terminal is called batching out. So again, example of a batch report was that same as the terminal summary you were looking at earlier, right? The only difference between this batch report and the terminal summary was, if you look back, we had cash as a type on the terminal summary. and the batch report omits the cash. All right. So a cash receipts journal is a special journal used to record only cash receipt transactions. So a cash discount on a sale taken by a customer is called a sales discount. So again, oftentimes businesses will grant their customers a cash discount when you pay in cash, particularly if you're like a service industry, you're like, hey, I'm here to refinish your floors and you'll hand me cash money right now. It's like, I'll do this for less than I would if I have to invoice you and record, because it's less work for me on my end because I have the money right now. And maybe I can do some like tax evasion stuff where I don't actually record that I took this money in, it just goes in, if I'm the single owner operator, I can do a little funny business and make it like I didn't make as much money as I did last year and not have to pay as many taxes. Not that anybody would do that.
No.
Okay. All right. So let's look at some examples of transactions and how to record them into our journal. So it says recorded cash and credit card sales of $6,280 plus sales tax of $376.80 for a total of $6,656.80. Our document was the terminal summary number 35. So again, cash coming in, because credit card and debit card and cash are all treated the same as far as we're concerned, because we get the money almost instantly. So that's the total of cash that's come in. So the sales portion of that is the $6,280, and the sales tax is the $376.80. So the way I record that in my cash receipts journal, so I have a month and date, check mark for the account title because there is no specific account this is being linked to. This isn't coming from one of my customers that's buying something on account or paying their account. So it's just a check mark. The document type is that terminal summary 35, so TS 35. Check for my post reference because this doesn't get recorded specifically anywhere else because it's a total coming in from the cash and sale or credit card sales. So my sales credit, and then the sales tax payable credit, the cash debit total is the total cash that came in. Does everybody feel okay with where we took those numbers to record them? So again, dated, check mark, post or document type, post reference, sales total, sales tax, total. Everybody okay? What if someone's come and paid their bill that we owe them? They bought something from us, we invoiced them, now they're turning around and paying their account. So here it says, received cash on account from Edmonds Hospital for $2,516.80, covering S448, receipt number 610. So the covering S448 doesn't matter to us. It's just a distractor. It's the invoice that we would have written them. So we have all this cash that's come in, and it's going into their accounts payable for Edmonds Hospital because now we have less money owed to us. That's why it's a down arrow on the accounts payable. So we date. Here we have an account title because this is linked to a specific company that has an account with us. They're paying down their balance on their account. The document number was that receipt 610. So the accounts receivable, that's the quantity of money owed to us, gets credited because that's going to decrease because cash has come in. So the good debt, the money people owe to us, is decreasing. because somebody's paid off some of their debt. So that's a credit. And then we have a cash debit because like money came in, right? Cash money comes in. Is everybody okay with the debits and credits here? Okay. So just as a quick refresher, if we have a discount, like a cash discount, and we want to calculate that, the sales invoice times the sales discount rate as a decimal is going to equal the sales discount. So if there's like a 2% discount on $100, the cash discount is $2, right? 100 times 0.02. Everybody's okay? So we have $100 of cash coming in, 98 is going to go to sales, 2 is going to be the cash discount for a total of 100, right? All right, and here's the example, whatever. All right. So looking at an example, transaction, received cash on account. So here someone's paying their debt back to us. From Palmer Dentistry for $1,421. Covering sales invoice number 462. I don't care about that, right? That doesn't help me right now. For $1,450, less the 2% discount of $29, and we recorded that on receipt number 611. So we got this much cash coming in. This much debt got paid off because of this sales discount. Everybody okay with that idea in terms of breaking this transaction? So there's 3 pieces that are going to need to be recorded. The cash, the account receivable, and the sales discount. So on our journal, date, customer name, receipt number. The account receivable, the debt that got paid off was $1,450. The way that debt breaks down is $29 was from the sales discount and $1,421 was straight cash or check or credit or debit or whatever, right? Okay. So how does the point of sales terminal determine the price of an item? It's all recorded in there beforehand, right? It's like a computer terminal, so it knows how much, you tell it how much you're buying and it tallies it up for you, i.e. like a cash register if you've ever been to a store. Like now it feels like at the fast food restaurants even they have the display in front of you where you see the stuff being rung in and it batches out the price for whatever it is and the quantity and just totals it up for you, right? The 2 types of batch reports. So there's the individual and then the summary, right? So it's individual, each individual credit card sale or the summary for the total of all the sales based on credit card types. 210 or N30 credit terms. So again, that means that if you pay within 10 days, it's a 2% discount. Otherwise, the whole amount is due in 30 days, right? So 210, the 2 is the percent discount, and the 10 is the days that you have to pay. N is for all, that's the total, and then the 30 is that's the 30 days to pay your total. All right, let's fire up the our send gauge and let's grind through a work together. Here for these.
Can I bring this up?
Sure. Okay. So, Do you guys want me to pause here for a moment while you fire up your respective send gauges? So I'm just gonna kind of talk in general here for a moment about what we're doing in 10.2. So again, in 10.2, what we're gonna be doing is we have a sales journal that's completed. That's here at the bottom of the screen. We're gonna take the transactions recorded on that sales journal and transfer them into the individual ledger accounts. Then we're gonna total, rule, and prove that sales journal. That's the problem that you're gonna be doing in 10.2, is that process. So, am I good to start here? Everybody ready for the work togethers? All right. So I'm gonna look at my sales journal first. So my first account debited is for Lenny Stanford. So I'm gonna find the Lenny Stanford ledger, and I'm gonna record this transaction here. So my date is 2, and my post reference would be the sales journal page number. So that's gonna be S for sales journal, and then page 9. I have account receivable debit of $1,696. And then I have a new debit balance here. I gotta add that up. So I have 2189.36 plus 1696. So 3,885 and 36 cents. And then my last step then is to add a post reference to my journal, which would be the account number for Lenny Stanford, which is 110. Everybody okay with the first transaction loop here that we did? Okay. Next, we're going to go do the Washington City School. So I'll click on that account. So date, post reference, we're still on sales journal page 9. Our debit to Washington Schools is $680. And then I can update this, living dangerously. Do this mental math here. I think I did that right. Did anybody want to check that?
Is it 2189.45?
Yes!
Yeah.
I did it. Mental math for the win. As long as I'm in Washington City Schools, I'm going to grab the other Washington City Schools Oh, got to record my post reference here though. Almost forgot to do that, 1:30. Let's go ahead and do the other Washington City Schools transaction as long as I'm in the ledger. So 15, S9. This time our transaction was for $1,849. I'm not going to mental math that one. That's too much for this guy.
It is.
40, 38, 45. And then my last transaction is for Venice Cafe. So let me grab Venice Cafe. So that happens on the 7th. We're still in sales journal page 9. That was a debit of $2,713.60. Giving me a new balance of too much mental math for me to want to trust on my own. Note that because both of these are still everything we're doing is debit, we're adding this whole time, right? There's no subtracting anything going on because these are all debits. And then Venice Cafe was account 120. So that should do it. Let's check. So everything looks good there, and there, and there. So I can grade this step and move on to the next piece. Everybody happy? So far, so good?
Yeah.
Too fast, or are we going okay?
Good.
It's good? All right. So the next step is going to be total and prove the sales journal. September has how many days in it? Is it 30 or 31? We got to check because we don't want to get it wrong.
30.
It's 30 days in September?
Yeah.
Okay. I really wish we could just like, everybody, all the months get the same.
That would be nice.
It would be nice, right? I feel like you could do it. Or at least like the 31 months are just all in a row, you know, where it's like the first 3 months of the year or something, or 4 months a year, all 31, and then 30s from there on out. I don't know why February needs 28. Seems weird to me. Anyway, that's the aside. So I have end of the month, date, and then totals is what goes here. Totals. So now I'm going to add down my accounts receivable debit column. I'm just going to add up all of those numbers there. So 1,696 plus 680 plus 271360 plus 1849, and I get 693860, I think. Anybody with their calculator should double check that.
Yeah.
Okay. Next up, I do the same thing for the next column. So I get 6689 there. Oops.
Close it.
6689, and then I add that last column. 96 plus 153.6, 249.60. Okay. And before I go and check here, I'm going to check to make sure that the sum of my credit columns equals my debit column, just to be sure. And it does on my end, so I'm quite happy with what I've done. I've entered everything correctly. So now to finish my proving, we're going to do the same thing that I just said that I did on my calculator right here. So I'm going to take my debit total. I'm going to take my sales credit total. I'm going to take my sales tax payable total. I'm going to add each of those down. And I notice that I get the exact same amount. That's what I just checked a moment ago in my calculator. This is just the form showing that, like, hey, check your work. We hit check our answer, everything looks good. We can grade that step. And now the last step is to post to the general ledger. So once we have these totals are going to get posted. So the accounts receivable debit should go into the accounts receivable ledger. So we have the 30th of September. And we have a accounts receivable, so we have a debit, 693,860. And we update our new total by taking that number and adding to it the 4,089.15 to get 11027 and 75 cents. And then I will record my, where are you at? Let's see. There you are. And I record that as account 1130 in the parentheses. Is everybody okay here? The sales credit will get recorded in the sales ledger. So again, 30th of the month. We're on S9 still, right? Did I forget to do that on the accounts receivable?
No, there's no.
Oh, there wasn't an option to do it. Okay. They did it for us or something. Interesting. All right. The sales credit should get recorded in the credit column, right? So 6689 was the number there. And I add that 6689 to this enormously large number. And then I record that account number 4110. Everybody feel okay what we did there? And then my last column is the sales tax payable credit. So sales tax payable ledger, 30th. We're still on journal S9. Again, this was a credit, so it goes in the credit column, 249.60. And I add that $27.33.78. And my last step then is to record the account number for our post reference. Check our answer, everything looks good. Yes, sir. We got it. Oos. Yes. Yes. All right. 6-3 work together? Sound good to you guys?
Oh, yeah, you already did it. No, you already did it, Gavin? Zeroing over a sheet or something.
I like to do it this way. All right. Here we're going to be recording transactions into our cash receipts journal. This is for the month of September. Our first transaction is on the 3rd. Said received cash on account from Lenny Stanford, so that's our account name. Lenny sold Lenny there. The document number was R264, that was the receipt. The sales receipt 216 is not of interest to us. Okay, so we got cash on account, so that's going to be an accounts receivable credit, right? He's paying his account, so it goes into the accounts receivable. For a total there was 2189.36. Bless you. But he got a 2% discount on that. So 2189.36 times 0.02. So 43, and then I'm gonna round that to 79, $43.79. So the amount of cash he actually paid was the 2189.36 minus that discount of $43.79, which is 2145.57. That's the actual account or cash that it came in on this transaction. Okay? So the amount of debt canceled, that was the 2189.36. The cash discount was $43.79. So the amount of cash I actually received was the difference in those two numbers. Next transaction occurred on the 6th. It says cash and credit card sales. That is going to be our check mark. And that was from the terminal summary number 38, so TS 38.
Yes.
So that was a sales credit. Everybody's okay, because this is from sales. See how it says sales on there? So 53, 26, 30. And then the sales tax was 298.15. And the total cash that came in was the sum of those two numbers. It tells me that's 56.24.45. Is everyone okay with that transaction? Next one happens on the 8th. Received cash on account from Venice Cafe, so that's my account number, somebody specific. That was receipt 265, so R265. Again, they're paying on account, so this is an account receivable. They paid $390.34 of debt, but they got a discount on that of 2%. So 2% of that was $77.81, again, rounding at the penny. And the difference in those two numbers gives me $382.53 of cash. Does that feel okay there? So again, I'm just subtracting the total account receivable debit from the discount to get the cash that came in, right?
Can you check it? Why says it's wrong?
No, I hope it's not wrong. Nope, my row's right. Oh, I forgot to put a page number on this. It says it's on page 9.
What's the cash debit for column, or for the second row?
For the second
Oh, the second,
row, 56, 24, 45. Did you do something silly and like type a comma instead of a decimal or something? Our next transaction, recorded cash and credit card sales. So again, that's a check mark because that's not to a specific account. From terminal summary 39, so to TS 39. We have some sales of 56, 24, 45. And then $320.59 of sales tax. For a grand total of 594504. And then our last transactions on the 28th. Again, we got cash on account from Washington Schools. There's our account title. That was receipt 266, so R266. We canceled out $1,509.45 in debt. They did not get any discount. So that just is the amount there. And that should do her. So I can, thank you, sir. So I'll submit. That's all she wrote. You guys feel okay as to what happened there? All right.
Let's go with my restroom real quick.
You just got here, but okay.
Why'd you giggle like that?
You guys have on your own an application for these two sections also, but do we feel okay about the process, what we're doing?
Very good.
Does it make sense in, as a mirror of what we did in the last chapter?
Indeed.
Then it
When's
just,
our test gonna be? Yeah.
so we'll do we still have to do 10-4. We
Right,
still have the review.
okay.
And I don't know if we'll do the test, I don't know what the period lengths
We
are.
have 50 minutes.
Yeah, I don't know that we'll do that, then we'll figure out what we'll do on the shortened day. But we probably won't do the test until we have a full test period, because it's not as long as the other test was, but it's not short. So 50 might be pushing it. So we'll kind of play that 50-minute period by ear, because sometimes even like, I don't know when the things are, and sometimes things run long, and we lose 10 minutes out of, like, who knows?
I think it's 75.
So I'm not gonna try to do a test
Great,
on
I messed up 2 numbers.
Okay.
crazy short period of days, I'm crazy, but not that crazy.
Thank you.
Whoa, why is this? What is this?